Understanding mortgage eligibility, calculations, and key metrics lenders use to evaluate your applications. When it comes mortgage products and the maximum amount you are able to obtain from lenders, it is useful to learn the key metrics lenders use to evaluate your eligibility and determine the amount of mortgage they can offer to you. In addition to your credit score and credit history, mortgage lenders often have requirements on three key metrics: loan-to-value ratio, LTV, gross debt service ratio, GDS, and total debt service ratio, TDS. Loan-to-value, LTV, equals sum of all mortgage principal, new and existing, on the property over property value multiplied by 100. For example, for mortgage products that allow up to 85% loan-to-value, LTV, ratio, the maximum amount of mortgage you are able to obtain on a $1 million property would be $850,000. This means you must provide at least $150,000 in down payment. Prime mortgage lenders, for example, top 5 big banks in Canada, will typically have mortgage products with lower LTV threshold compared to subprime mortgage lenders, private lenders such as credit unions. Borrowers are typically able to obtain higher mortgage loans with subprime lenders at the cost of higher interest rates and lender commissions. Gross debt service, GDS, equals mortgage principal plus mortgage interest plus property tax plus heating plus 50% condo fees, if applicable, over income multiplied by 100, where heating is assumed to be $100 a month if not specified. For example, if you plan to purchase a house, not condo, with $500 a month in property taxes and $150 a month in heating, and your monthly income is $3,000. For mortgage products that have a maximum GDS ratio of 60%, the maximum amount of mortgage payment, principal plus interest, you can have is 60% of $3,000 minus $500 minus $150 equals $1,150. If you are married, assuming with the same income, your spouse's income is also calculated in, and the number will be higher at 60% of $6,000 minus $500 minus $150 equals $2,950. Let's take a break and consider both the LTV and GDS ratios described above. If you are single with a monthly income of $3,000, and you plan to purchase a $1 million detached property with $500 a month in property taxes, and $150 a month in heating, even if you have $150,000 in down payment to satisfy the LTV ratio on a $1 million mortgage, you most likely won't be able to qualify for the $850,000 mortgage amount, as the monthly mortgage payment, principal and interest, cannot exceed $1,150 to satisfy the GDS requirement. Total debt service, TDS, is very similar to GDS with the difference that it also takes your other debt and obligations into calculation. Other debt and obligations are debts such as credit card payments, line of credit payments, personal loan payments, car loans, etc. TDS equals mortgage principal plus mortgage interest plus property tax plus heating plus 50% condo fees plus debt payment, over income multiplied by 100, where heating is assumed to be $100 a month if not specified. For example, if you plan to purchase a condo with $300 a month in property taxes, $400 a month in condo fees, and $80 a month in heating, you are paying $150 a month in car loans, and your monthly income is $3,000. For mortgage products that have a maximum TDS ratio of 70%, the maximum amount of mortgage payment, principal plus interest, you can have is 70% of $3,000, minus $300 minus $200, 50% condo fees, minus $80 minus $150 equals $1,370. If you are married and your spouse has the same income, the maximum amount of mortgage payment would then be 70% of $6,000, minus $300 minus $200, 50% condo fees, minus $80 minus $150 equals $3,470. The maximum amount of mortgage is determined by the LTV ratios with respect to the maximum mortgage payment allowed that is determined by the GDS and TDS ratios and is affected by the interest rate. Luckily, borrowers don't need to pull their hair out with all the LTV, GDS, and TDS calculations. The lenders have the technology and software to perform these calculations. We hope the above explanations will give you a clear idea of how everything ties together, such as how your income and debts are considered in determining your mortgage amount and eligibility.